In an industry where customers can take 30, 60, or even sometimes 90 days to pay, it makes sense why so many trucking companies decide to factor their invoices to get paid quicker. But not every factoring service makes it so simple to do that. I'm Caroline, your trucking business professor here at the Bobtail Help Desk, and my goal is to help your trucking business thrive. If that sounds good to you, subscribe to our channel. I've already made a couple of videos about factoring. We've gone over the basics, and we've gotten into the weeds about some of the things you should look for in a factoring contract. Today I want to go over a commonly misunderstood concept in factoring: recourse versus non-recourse. And if you think you already know what I'm about to say, just hold on a second, you may be surprised. In case you're new to the concept of factoring and you haven't watched our previous videos, factoring is a financial tool where you sell your invoices to get paid quickly. The factoring company will give you a percentage of the value of those invoices and then turn around and collect the full payment from your customers. This process gives carriers immediate cash flow, eliminating the weeks-long wait for brokers and shippers to pay. So now that we're on the same page, what's the difference between recourse and non-recourse factoring? In very basic terms, non-recourse factoring means that the factoring company is taking on more risk to factor your invoices. This means that the carrier will not have to repay an invoice that their broker or shipper doesn't pay to the factoring company. For example, if you deliver a load and factor the invoice, but then the broker goes out of business and files for bankruptcy before they can pay your factoring company for that invoice, you don't have to repay that money to your factoring company. With recourse factoring, the carrier is still responsible for the payments of their customers. So the factoring company can issue a chargeback for invoices that haven't been paid. After hearing that, you're probably thinking, oh, I definitely want non-recourse factoring because I don't want to be responsible for those payments. But hold on, it's really important to understand how those differences between non-recourse and recourse factoring actually play out in the real world. Non-recourse factoring can sound really good, but when you get into the details, you might find that recourse factoring is actually a better deal in most scenarios. The non-recourse part of a factoring agreement is essentially a type of insurance, and like any insurance policy, you're going to have to pay for it. This is why carriers can expect to pay a higher factoring rate when they sign a non-recourse factoring agreement. In addition, the non-recourse factoring business model provides a pretty big incentive to deny claims. Look closely at the contract and you'll see that that non-recourse part really only applies to very limited scenarios. Usually the legal bankruptcy of the broker. Disputed invoices aren't covered. Damaged freight, not covered. Unless the broker goes out of business and files the correct paperwork you will be required to submit in full, by the way, the factoring company will be able to require repayment from you. Non-recourse factoring services are also much pickier with the types of brokers that they'll factor. This means you may not be able to factor all of the invoices you want to, or it may even limit the brokers that you can actually work with. For all of these reasons, non-recourse factoring agreements are usually quite complex and lock you into anywhere from 1 to 3 years. Break the rules of that contract and you could be in for some hefty non-compliance fees ranging from hundreds or even thousands of dollars. This is why at Bobtail we offer recourse factoring agreements to our clients. It allows us to avoid those complex legal terms and conditions and puts the carrier in control of their business. Under our recourse factoring agreement, we can issue chargebacks to carriers for unpaid invoices. But don't panic. This doesn't mean that you're always held 100% responsible for every invoice that a customer doesn't pay. We have a track record of being able to collect on really problematic invoices without passing on the total cost to our customers. Like I mentioned in a previous video about broker non-payment and underpayment, under US law, freight brokerages are required to hold a $75,000 surety bond. So if the broker you're working with goes out of business before they pay our invoices, we can file a claim on their bond. Another law in the US places the responsibility of payment on the shippers. If a broker goes out of business or refuses to pay, the shipper can be held responsible for paying the carrier. At Bobtail, we can file claims like this very quickly and at no extra charge to our customers. Now, I can't say that these claims work out 100% of the time. And in cases where the carrier is not paid or underpaid due to negligence or some other factor under the carrier's control, there's not a whole lot we can do. But I can say that we work very hard to avoid issuing chargebacks and do everything in our power to help you out of bad situations. Okay, the final word on recourse versus non-recourse factoring. Non-recourse factoring might look really good at first glance, but take a closer look and you'll find that the extra cost, terms, and conditions related to these agreements really aren't worth the very limited protection that they may offer. Here at Bobtail, we aim to provide factoring in the simplest way possible. That means no long-term contracts and no hidden fees, terms, or conditions. We don't hold your money in reserve, we don't charge for credit checks on brokers, and we don't enforce any volume requirements. All you pay is the factoring rate, and we'll never tell you who you can and can't work with. Our mobile and web apps make it super easy to submit invoices from wherever you are. If you're interested in learning more about our factoring service, visit bobtail.com or call the number in the description. If you found this video useful, give it a like and subscribe to our channel for more trucking business knowledge. I promise we don't always talk about factoring. Don't forget, we also have a Facebook group called the Bobtail Help Desk where you can get your trucking industry questions answered by experts. And I'll see you in the next video.